Crypto Benta, this is Crypto Benta, this is Crypto Benta. Crypto Benta for you, this is Crypto Benta, this is Crypto Benta, this is Crypto Benta. Crypto Benta for you, smash those likes. Smash those likes. Crypto Benta for you, smash those likes. Smash those likes. Crypto Benta for you, smash those likes. Smash those likes. Crypto Benta for you.
Crypto banter for you, and Bitcoin moving sideways for me and for you. Bitcoin is moving sideways again. It's trading around the $32,500 level. And it's been range bound for a while. It's been trading between, say, 32,000 and 38,000 for quite a while. In fact, longer than we've seen Bitcoin range bound for a long time. And despite this, all the models and all the on-chain metrics are calling for a move in Bitcoin, and most of them are calling for a move in Bitcoin upwards. So why is it that if all the models are calling for a move upwards, why is it that Bitcoin is hovering at these levels? That's what we're going to be talking about today, because there's one indicator that decides whether or not we're in a bull or a bear market, and no one is looking at this indicator. So today we're going to bring you the indicator. We're going to show you when we think it's going to move, and then we're going to tell you whether we think it's going to be a bull market move or a bear market move. Welcome back, guys. As you can see, I'm back. I'm back in the studio. I'm ready to get back into action, despite what's going on in the markets, despite the fact that Bitcoin is doing what Bitcoin does and is hovering around 32,500 level. I know that you guys missed Sheldon this morning. Well, he does have COVID. So our man has COVID. He wanted to come on the stream. I said, Sheldon, you're not coming on the stream. You're not working today. But he insisted on saying hey to you guys. So, brother, how are you feeling?
What's up, buddy? I'm tired. Very tired. But nice to see you back in the office. It's terrible that as soon as I come back, you're not there. Well, I'm not there.
Sheldon, where did you get COVID from?
I have no idea. Great question. I think everyone else is changing my son there. I think that's the biggest question that everyone can ask. I have no idea. There's quite a few people now started to get it around me, so it could have come anywhere.
But you're feeling okay?
I'm okay. I'm making sure I'm resting. There's still a long year, and I think it's okay to be resting now. Well, Bitcoin's a bit boring, so that when the time is coming, we'll be there.
Well, listen, get some rest. I know you wanted to do some charts here on the stream today. I don't want you to do anything. I mean, I don't want you to do anything until you get better. I want you better. The duo needs to be back, man.
We're back. We'll be back. I'll get some rest.
Brother, feel better, my friend. Well, at least he's looking good. He's looking good. He's looking a lot better than I thought. He doesn't look like someone who's got a bad COVID, but we wish him well. Sheldino, get some strength, my friend. All right, so if you're new to our channel, welcome. Subscribe to the channel. At least 2 streams every day, but probably sometimes more. Also, like this video, because YouTube have been gatekeeping YouTuber content, specifically crypto content. And the only way to get through that is by liking the video. So like this video and get this video shared. And if you are here, and remember the streams used to be much bigger. I mean, we used to have 16,000, 20,000 people on the stream just a few months ago. And now there's a whole lot less people on the streams, and it's everybody. I mean, if you look at George and you look at Sheldon Evans and you look at BitBoy, the number of people in crypto has gone down, and it's gone down a lot. I mean, we used to get 16,000, we now get 10,000 on the stream. And that's why we need you guys to like the content, to get people here. But the way I see it, being in crypto is like training for the Olympics. You can't just expect to arrive when the bull market comes, to get onto the field, and then to start making money. That's not how it works. You've got to be here to train. You've got to train in the bear market. So when the bull market comes, you know exactly what to do. Crypto is complicated, guys. You need to have wallets, you're staking, there's private keys, there's sharing your wallets, there's smart contracts, there's connecting your MetaMasks, there's staking, there's ways to lose in staking, and you need to know exactly what you're doing. If you don't know what you're doing, you'll make mistakes, and those mistakes are going to be very costly. So if you guys are here, and you're here now, it means that you guys are the equivalent of the Olympic athletes that are training for when the bull market comes. And by the time the bull market comes, you'll know exactly what you're doing. And those are the kind of people who land up making money, not the ones that are here all the time. Not the ones that are here only for the bull market. And you can see that some of the bigger institutions have implemented exactly that thinking. If you look at what Fidelity said, is they're saying, despite what's going on in the markets right now, they are going to increase their headcount by 70%. And the more important part of this article, if you ask me, is that they say the staff will be used to develop new products and expand into crypto other than Bitcoin. So you're now seeing the institutions starting to take note of other coins. Probably they're looking at Ethereum and they're looking at DeFi. And they're doing this even though the interest seems to be waning just a little bit. And that is because, like I said, crypto is like being in the Olympics. And you've got to train in the bear market. You've got to train when there's no price action to be ready when there is price action. So that's what you guys are doing right now. Let's get more people onto the stream. The only way to do it, guys, is to smash that like. Smash that like. Anyway, other things that happen in bear markets like this, or when there's bearish trends, people become salty. Remember, I spoke about these salty people. Remember the people that couldn't take responsibility for their own actions. And they get salty. You notice that on crypto Twitter, everyone gets salty. In the bull market, everyone was friends and everyone was sharing coin suggestions and when Bitcoin would run. And in the bear market, everyone's looking for people to, or some people are looking for other people to blame their losses on, and they become salty. And it's everywhere. I mean, I don't know if you guys saw this, but even MicroStrategy. So Michael Saylor, MicroStrategy, it says, the law offices of Frank R. Cruz announces investigation of MicroStrategy Incorporated on behalf of investors. And it says, MicroStrategy announced that it purchased an additional 13,005 Bitcoins for approximately $500 million in cash, bringing its total holdings to over 100,000 as the price of Bitcoin continued to decline. Bloomberg reported that MicroStrategy may have to mark down the value of the Bitcoin. And what they are investigating concerns whether the company's board of directors, get this, breached its fiduciary duties to shareholders and grossly mismanaged the company in connection with the above conduct. What they're saying is, what they're alleging is, or what they're investigating is, did MicroStrategy's board of directors breach their fiduciary duties, their responsibility to their investors, by investing so heavily in Bitcoin? I mean, Michael Saylor was quite transparent about what he was doing. There should be no surprises about what he was doing. But, the USA and salty people, and when markets are going good, everybody wanted a piece of MicroStrategy. And now that there is a slight pullback in the markets, well, people are asking questions. They're asking some really tough questions, like, were the board of directors, did they breach their fiduciary duties to their shareholders, and did they grossly mismanage the company in connection with their alleged conduct, which is buying more Bitcoin? That shows you the difference between people who are here during the bear market and people who are only here for the bull market who want to make money. They come here, they think that they're going to make money, and they do make money for a few days. But then the problem is they don't know how to hold on to the money. And I guarantee you that all those people that were here to make quick money didn't actually make quick money and probably walked away with losses. So let's see what happens with this Michael Saylor thing. I always said that it was a little bit of a risk that Michael Saylor was taking because he was betting the house. And I kind of saw this. I actually tweeted about it. I said, Michael Saylor, he better be right, because if he's not, there's definitely going to be lawsuits. And I believe that this is the first lawsuit of many, many, many lawsuits that are going to happen. Anyway, so that's the news out of the way. Well, in fact, there is some more news coming out of the way, and that's that the inflation numbers, let's have a look here. The inflation numbers seem to have come out. And any guesses whether the inflation numbers were higher or lower than expected? Well, tell me in the comments. What do you think? Do you think that the inflation numbers are higher than the expectation or lower than the expectation? I mean, there's only one right answer to this. Let me remind you guys that the Fed first said that inflation is going to be around 2%. Then they said that inflation is going to be around 2.4%. And they kind of got us used to 2.4%. Last month, there were numbers thrown around of 4% and 5%. And now the new inflation numbers are out. What do you think? Higher or lower than expected? One guess. Come on. Come on, you guys are smart. Yeah, exactly. You called it right. The new inflation numbers, guess what? US consumer price increased in June by more than forecast. Oh my goodness, what a surprise. Who could have guessed that? The consumer price index, the inflation number, jumped 0.9%. in June, and now the new inflation numbers are 5.4%. Guys, let's put this back into perspective. The USA has inflation of 5.4%. And the buzzword that they're using is, don't worry, it'll pass. This is what they call transitory inflation, which is bullshit. You know why it's bullshit? Because inflation is exponential. If prices go up 5% today, and then tomorrow they go up another 2.5%, in total, prices have gone up by about 8%. Because you take the 5% and you add it to your base, and then you add the 2.5 to the base plus the 5%. So the numbers here are actually getting very, 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 very scary. I mean, when the US is talking about inflation numbers of 5 and 6 and 7%, and this is after they have manipulated the numbers. They've removed all aspects of the basket. Okay, we're in big trouble here, guys. We're in big trouble here. The US inflation is in big trouble. And if you're still holding fiat, then I would be very, 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 very worried. And later on the show today, we've got an amazing guest. We've got Saifedean Ammous. Now, I don't know how many of you guys read his book, The Bitcoin Standard. But The Bitcoin Standard was, I think it's the best book ever written on Bitcoin. I don't think anybody has written a book like The Bitcoin Standard on Bitcoin. Well, now he's written a second book, and it's called The Fiat Standard. So I'm dying to dig in to find out what is in the Fiat Standard. And there's so much that I want to talk to him about it. We're going to get him on just after we do the main story today. I can see him in the waiting room, but very, very, very excited. In fact, I want to ask him one question before we carry on. Saifedean, one question before we carry on. Were you surprised by the inflation numbers? Saifedean, can you hear me? It doesn't look like he can hear me. Can you hear me? We can hear you. All right, so we will ask him if he's surprised by the inflation numbers. What else is it? Oh, let me know if I should keep the beard market or not keep the beard market. Let me know in the comments. The hash rate crisis. The hash rate crisis of the hash rate moving out of China. Okay, wait, Saifedean's back. I can hear you. Saifedean, were you surprised by the inflation numbers today? 5.4%. Were you surprised by that? We can hear you, but you can't hear us. Oh, I'm sure he will find a way to do it. All right, let's talk about the hash rate crisis, which we had. And that was, remember, the miners that were moving out of China. Well, we can see that the hash rate has kind of come back. I mean, it went from about 64 exahashes. It's now back at close to 100. So I think what we can see now is that the hash rate has moved out of China. It's slowly moving back. And you can see that miners who were previously selling Bitcoin to fund moving out of China have actually been accumulating. And if you look at the last couple of weeks, since June, since the 7th of June, you can see that the miners have started to accumulate their Bitcoin. There was a massive sell-off in the beginning of June, but then from the 7th of June, the miners have actually been reaccumulating Bitcoin. So that's actually quite a big thing. It shows that I would say the hash rate crisis is now behind us. And so usually when the hash rate goes up, the price goes up. But when the price goes up, the hash rate goes up. I don't know which comes first. But usually when the one goes up, the other one goes up. Let's see if I can find you guys a chart to show you this. I did have something over here. That's the stock to flow deflection model. There was one here that showed. Okay, so basically what we do know is when the price goes up, usually the hash rate goes up. In fact, you can see it over here, and you can see that there's a big correlation between the price, which is the gray line, and the hash rate, which is the orange line. And generally, when the price goes up, the hash rate goes up. Usually it's more profitable for the miners to mine when the price goes up, because remember, the miners make Bitcoin when they mine. And when the price goes up, it's more profitable for them to mine. So you get more miners on the network. And so the hash rate goes up. So that hash rate crisis seems to be gone, seems to be a thing of the past. The miners are moving out of China, and probably the miners are moving to places where there's much greener mining. In fact, we're seeing a lot of statistics come out to tell us that the mining is actually becoming carbon neutral and that it's being done with renewables, et cetera, et cetera. So it was a big shock to the Bitcoin network, but it seems to have become less of a shock. And I think everything's going back to plan now. What else before we start this? There was some other bit of news for those of you who are watching arweave. This is very big news. Wrapped arweave on the Ethereum network is now available, which brings us 1 step closer to arweave being more compatible with Ethereum. And we've been speaking about that for a while because remember, arweave doesn't support smart contracts. It's just not the way that it's done. And yesterday, someone launched, a company called Finance Ever launched wrapped arweave, which means that arweave is now actually trading on Uniswap. So a lot is actually happening on the arweave network. There's three networks where I get the same feeling I got when I saw the Ethereum network start waking up in the very, very, very early days. The first one is obviously arweave. I think arweave, the brain power and the number of people that are building on arweave is unparalleled. And the level of dApps and applications that are being built on arweave are unparalleled in this industry, in my opinion. The next one that is being built, in my opinion, with the same vigor as ETH is Luna. So Luna, again, I'm seeing a lot of projects. I'm seeing launch pads. I'm seeing a whole lot of others that are being created. So again, one of those ecosystems that reminds me of the Ethereum ecosystem in the old days. And the last one is Thorchain. So Thorchain, Rune. We've seen Thor Starter, which has just come onto the market. And there's Thor Swap, which is the exchange. And I'm seeing a lot of smart brain power starting to build on Thorchain. So keep an eye out for those three ecosystems. That's where I think most of the returns are going to come for those of you who are not looking at the majors, not looking at Ethereum and Bitcoin and everything else. All right, what else? What else before we get into the biggest story of the day? Let's see. Is there anything else we want to talk about before we get into the big story of the day? There's not. So let's get into the big story of the day.
Crypto Benta for you. This is Crypto Benta. This is Crypto Benta. This is Crypto Benta. Crypto Benta for you. This is Crypto Benta. This is Crypto Benta. This is Crypto Benta. Crypto Benta for you. Smash that like.
Alrighty, we're back. Smash that like. Let's talk about the main story of the day. The main story of the day is I said to you guys that Bitcoin seems to be range bound, and it's been moving in this range for quite a while now. 32,000, 33,000, 34,000. And this is despite the fact that every single on-chain metric in the world indicates that the bear market, or we shouldn't be in a bear market. Bitcoin active address is growing at a faster rate than ever before. The Bitcoin hash rate is back. The whales are holding. The short hands are out. Every single metric that you look at on-chain says that the Bitcoin price should be going up. But despite this, the Bitcoin price isn't moving. And we've been in periods before where the Bitcoin price has just been moving sideways. But they felt slightly different. I must say, since I've been around, and I've been around since about 2014, 2015, every time that the on-chain metrics look bullish, the price usually follows. This time, no matter what the on-chain metrics are saying, Bitcoin is hovering at around the same level, which kind of says that people aren't looking at the right data. Even the smartest people in the space may not be looking at the right data. And I want to show you some of the data that they're looking at. So I think the biggest metric in this industry is the stock to flow model. And this stock to flow model, it was brought into crypto by a guy called Plan B, and it's probably been the most accurate Bitcoin model in the industry. And what this stock to flow model looks at, it looks at the amount of Bitcoin available versus the rate at which Bitcoin are being mined or coming onto the market. Now, what you can see here is that the stock to flow model predicts a price of about $100,000 at the end of 2021. The end of 2021, the stock to flow model predicts a price higher than $100,000. If I remember correctly, it is the price that the stock to flow model is predicting is about $120,000. Now, this has been the most accurate Bitcoin model that we've had in a long time. But even this stock to flow model, if you can see it, even the inventor of the stock to flow model says, my on-chain data tells me that this bull cycle is not over and 64K was not the top. That's in line with the stock to flow model and the stock to flow X model. Also, my floor indicator says we will not go below $47,000 close till the end of August. But even if we look at the stock to flow model, the deflection from the stock to flow model today is the biggest that it's ever been. In the 11 years of history, or the 10 years of history, if you look at this chart from Glassnode, you can see that there's only been one time in 2011 when this model, when the price deflected so far from this model. So even the most reliable model on Bitcoin is now at the risk of being misproven. So even the founder of this model, Plan B, says the June closing price of 35,037 was far below stock to flow, as in the next 6 months will be make or break for the stock to flow model. Again, what he's basically saying is, look, if the stock to flow model doesn't come back into sync, then maybe the stock to flow model isn't going to work. And he's not the only one that is starting to doubt their models. In fact, every model that you look at today says that Bitcoin should be breaking out, and it's not. Even, let's take a look at William Clemente, and he's this sophomore youngster who's been analyzing on-chain data. And he keeps coming up with a whole lot of different models, and he's very, 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 very smart. This guy is super, super smart. The latest one that he's come up with says the user growth is doing the exact opposite of what it has done following each major Bitcoin bull run, without any euphoric spike that we've typically seen. What he's basically saying is that every time that we have a Bitcoin spike, as you can see over here, there is a blow off top. There is a massive spike to the top. You can see it in 2011, you can see it in 2013, you can see it in 2014, you can see it again in 2018. But he's saying that right now, we haven't had one of these massive new entrants into Bitcoin. We haven't had the spike of new entrants into Bitcoin. And so he doesn't think that this is the top. He also says, he has a lot of these models, but with all of these models, he keeps saying that the Bitcoin price should be going up. Another one of his charts says that the large entities, the whales, have got more conviction than ever. And if you can see where the orange line is, it means that the whales have been accumulating more Bitcoin than they have in a long, long, long time. So he's also saying that the Bitcoin price should be going up. Then you've got Willy Woo. And we all know Willy Woo. Willy Woo is one of the smartest on-chain analysts that you have out there. And Willy Woo is also saying, he's saying the estimated user count seen on Bitcoin's blockchain is growing faster now than any other time in its 12-year history, even during this dip. He says, in fact, especially during this dip. So he's saying that the Bitcoin price should be going up. He also says, as price grinds sideways, bearish coins are being scooped off exchanges at a very bullish rate. PS, the latest sizing of withdrawals versus deposits are at a local high at levels that signal a bottom. Whales are scooping. So again, another model that says that the whales are scooping these coins, taking them off exchanges, and eventually we should get some kind of supply crisis. So if that's the case, why is it that the Bitcoin price isn't moving up? Are these analysts maybe looking at the wrong metrics? And I think that the answer is yes. I think that all these models are valid in a normal market, but this isn't a normal market. And to understand why this is not a normal market, you have to understand where we came from in this bull run. And that's what I want to show you guys today. I want to show you guys where we came from in this bull run and why I think that all these on-chain analysts are actually looking at the wrong metrics. So to understand that, let's look at a Bitcoin chart. Let's look at a Bitcoin chart from March last year. Now, look at this area over here. This is March last year, where Bitcoin was at under 5,000. It was at about $3,500 or $4,000. And that is when we went into the COVID lockdowns. And all markets got shocked. Bitcoin hit the low, the US stock market hit the low, a lot of other assets hit the low. And that is because the world was in disarray. But then something interesting happened. The US government started to print money uncontrollably. They started to do stimulus checks and many other stimulus initiatives to get people to survive through the lockdowns. And as they did that, people started to migrate their money into assets. They started putting their money in the stock market. They started putting their money into gold. They started putting their money into many other assets. And this is when the narrative of Bitcoin as a digital store of value to compete with gold really took effect. And you had a whole lot of buyers putting money into Bitcoin because they thought that this is potentially another way to hedge yourself against the US government money printing. Now, who were these buyers? The buyers weren't retail investors, or very few of the buyers were actually retail investors. The buyers that were trying to hedge themselves against money printing were high net worth individuals, and they were institutions, they were funds, they were pension funds, they were major Wall Street investors that said, hold on a second, the stock market has started running, gold has hit all-time highs. I don't know if you guys remember, but gold hit an all-time high. And now these institutions were looking for somewhere to put their money. And they discovered Bitcoin. They said, Bitcoin is this digital store of value. It's this new digital gold. It's much better than gold. How do we buy this Bitcoin? Bear in mind, a year ago, if you were a pension fund manager or if you were a fund manager and you were looking to buy Bitcoin, you had no custody solution. You didn't know where to insure it. You didn't know where to store it. So where would you buy Bitcoin? The answer is simple. You would try and buy Bitcoin shares. If you can buy Bitcoin shares, you know how to buy shares. You've bought shares before. You buy shares all the time. They're stored in custodians that you're used to using. There's no risk. You don't have to hold private keys. So where would you buy the Bitcoin shares? Simple. You'd buy GBTC, Grayscale Bitcoin Trust. And that's exactly what happened. People went out and they started buying shares in this Grayscale Bitcoin Trust. I don't know if you guys remember how the Grayscale Bitcoin Trust works, but let's actually have a look at what this Bitcoin Trust is. So the Grayscale Bitcoin Trust, the GBTC, it's a trust. It's a fund. And all this trust does is buy Bitcoin. It can never sell Bitcoin. In fact, in the trust papers, there's no clause for redemption. There's nowhere that it says that that you can redeem and they can sell the Bitcoin. So it's like a big fat Pac-Man that just buys Bitcoin, buys Bitcoin, buys Bitcoin. Investors buy shares in the trust. The trust takes the money, buys Bitcoin, and holds it in the trust, and holds it in the trust forever. And when investors put in money into the trust, they get shares. Okay, so we all know what Bitcoin Trust is. Accredited investors, rich accredited investors and institutions can buy the shares at net asset value. In other words, accredited investors can buy the shares at the same price as the number of Bitcoin in the trust. So let's say the trust has 10 Bitcoin in the trust. You times that by the price of Bitcoin, and that is the net asset value in the trust. And accredited investors, and only accredited investors, can buy Bitcoin at net asset value in the trust. Then they wait 6 months and they get their shares, and then they can sell their shares on the open market to unaccredited investors. So it's a trust. GBTC is a trust. It buys Bitcoin. It only buys Bitcoin. And then they get shares and they sell the shares to unaccredited investors. And we've spoken about this a lot on the channel. We've spoken about this before because we always spoke about the GBTC premium and discount. If you want to buy GBTC shares as a retail investor, up until a certain point, up until March or February this year, the shares sold at a premium. They sold at a premium to the Bitcoin in the trust. So it meant that you were paying a premium for your Bitcoin. Now, in the US, it's probably for some people worth paying the premium. Why? Because it's part of your 401k. And with a 401k, American investors can buy and sell these shares and not pay any tax until they realize their 401ks or their pension funds. And so for American investors, buying and selling shares in GBTC sometimes is better than buying and selling shares better than buying Bitcoin. For Wall Street, it's a dream come true. You buy shares in GBTC. You don't have to worry about where you're going to store them. You don't have to worry about insurance. You don't have to worry about custodianship. You don't have to worry about any of that. And you pay GBTC 2 or 3% a year. Now, here's where this dream gets even better. You want to know where this dream gets even better? The dream gets even better when you, as Wall Street, can buy these shares at net asset value, and you can sell them to the unsuspecting retail investor in the US for premiums of up to 40%. And that's what people were doing. They were buying GBTC. They were waiting 6 months. They were getting the shares, and they were dumping it on unaccredited investors at premiums of 30, 40, 50, and 30, 40, 20%. And you can see that happened all the way until February when something happened. And this has been going on. I want to show you something. This is not a new thing. The GBTC premium has been around for years. In fact, ever since 2013, GBTC has always traded at a premium, sometimes even at 100% premium to actual Bitcoin. So it means that retail investors were paying 100% premium for their Bitcoin. 100% premium for their Bitcoin. Okay, so here's where it gets super interesting. Let's look at the GBTC premium. GBTC became the biggest buyers of Bitcoin. They bought more Bitcoin than anyone else. In fact, they bought about 650,000 Bitcoin in the last year. In fact, in the last year, they bought about 500,000 Bitcoin. And I want to actually show you this. So they were the biggest buyers of Bitcoin. As you can see over here in this chart over here, this is the Grayscale AUM. The black line shows them buying and buying and buying. Let me show that to you. The black line here shows them buying and buying and buying and buying Bitcoin, and the orange line shows the price. 2 months after GBTC stopped buying Bitcoin, as you can see when it plateaued, the price peaks, and since then, the price has been going down and down and down and down and down. What that means is that no one is buying the GBTC shares at net asset value. At the same time, the premium on GBTC from the 1st of March, which is when they stop buying, I'll show you again. This is when they stop buying Bitcoin over here. You can see over here, it's around March this year. The premium on GBTC went to a negative premium. It went to minus 11%, and it's been going down ever since. So those people that paid net asset value, or some of them even bought their shares at a premium, if they want to now sell their Bitcoin, they're going to sell their Bitcoin, they're going to sell their GBTC shares at a 15% discount. So why is this so important? Why are we making such a big deal out of it? Well, all the outlets have been speaking about a massive GBTC unlock that's about to happen. So there is a massive GBTC unlock. We've spoken about it before. It is happening this weekend. It's happening on Sunday. On Sunday, the majority of the GBTC shares are being unlocked. And you can see that over here in this chart over here. So on Sunday, the majority of the GBTC are being unlocked, and altogether about 41,000 Bitcoin worth of GBTC shares are becoming unlocked. Now, those shares were bought 6 months ago. 6 months ago, the price of Bitcoin was $18,300, which means that people who are selling their GBT shares now will be in the money for as long as the price of Bitcoin plus the premium doesn't equal 18,500, which theoretically means that these people can keep selling for a long time and still be in profit. Okay, so that means that today, if you are a fund manager, you have two options. You can either go and buy Bitcoin. Now remember, you're a fund manager. You're not a savvy investor who wants to hold his own keys and wants to exit out of the system, because those people will continue to buy Bitcoin on the open market because they want to hold their own keys. But a fund manager, the big buyers, the institutions, I want to show you some of the big buyers that bought from the Grayscale Trust. Let me show you some of these buyers, just to give an idea of how many institutions actually bought Bitcoin. So let's look at who participated in the Grayscale Trust. The biggest culprit of them all was BlockFi. And I said this to you guys before. BlockFi, take your Bitcoin, put them in the GBTC Trust, earn the premium, and sell it to retail investors at the premium. Well, that's what they used to do. But now the retail investors got smart, and BlockFi has got this massive hole. In fact, BlockFi has got a position of 19,852,000 in GBTC, and they are down on their position. And not only are they down, but if you look at the discount, they are going to still, if they wanted to sell their shares, they would sell their shares at 15% lower than that. So BlockFi have got a massive, massive, massive problem. But you can see that a lot of other asset managers use Grayscale to buy their Bitcoin. So why am I telling you this? If you are a fund manager today, you have two options. You can go and buy Bitcoin on the open market and pay $32,500, which is the price of Bitcoin today. Or, and if you do that, you got to worry about custody. You got to worry about insurance. You got to worry about storing the private keys. Or you can go and buy GBTC shares. And if you buy GBTC shares today, you're getting those same Bitcoin at 15.35% less than the market price. So at about $30,000 or $28,500. That's what you'd be paying for a Bitcoin today. Now put yourself in the shoes of a fund manager. If you were a fund manager, what would you do? Would you buy Bitcoin on the open market and pay $32,500? Or would you buy GBTC and pay $32,500 less less 15.35%. Unless you really want to store your own keys, it's better for you to go and buy GBTC. And these fund managers aren't stupid. They know this. So what are they doing? They say that as long as we can buy shares at GBTC, which only holds Bitcoin, at 15.3% under the current price, we're not going to buy Bitcoin on the open market. If they're not buying Bitcoin on the open market, that means that the biggest buyers, the same buyers that caused this bull run. Remember I said to you that the Grayscale Trust was the biggest buyer of Bitcoin. They bought 500,000 Bitcoin in the period between March last year and today. 500,000, 500,000 Bitcoin. Today, they are the biggest holders of Bitcoin. I'll show you this. They are the biggest holders of Bitcoin today. They own 650,000 Bitcoin. Right? And you can buy those Bitcoin at a discount to net asset value of 15.35%. Okay, so if you were a fund manager, what would you do? You would buy the Bitcoin you would buy shares in the Grayscale GBTC Trust, and you would pay 15% less for those Bitcoin. And for as long as this behemoth that bought so many Bitcoin is trading at under net asset value, there's no way that the market can go up. Because if people are buying Bitcoin off market at 15.35% less than a Bitcoin, fund managers, why would they pay 15.35% more and buy on the open market? They wouldn't. So let me get to the point here. The point is very simple. For as long as there is a GBTC discount, it means that there is a lot of selling pressure from the biggest holder of Bitcoin today in the world, one of the biggest holders of Bitcoin today in the world, 650,000 Bitcoin. And for as long as people can buy their shares at 15.35% discount or a bigger discount to market price, they're not going to buy Bitcoin on the open market. So when will the market turn? When the GBTC shares have all been bought up and when this discount goes back closer to zero or becomes a premium. That's the only indicator that matters. All these on-chain metrics, yes, they can be bullish and they probably do count in a regular market. But this is not a regular market. Grayscale made the bull market by making it so easy for investors to buy GBTC or to buy Bitcoin. And now this biggest buyer, no one wants their shares. No one wants their Bitcoin. And so for as long as there is a Grayscale discount, the market simply cannot recover. Let me know what you think, guys. Let me know what you think. It is the one indicator that no one is talking about, but it's the fact that anybody right now can buy Bitcoin at 16% under the market price. And that's what I would do if I were you guys. Instead of buying Bitcoin today, if you're not precious about holding your keys, and I am precious about holding my keys, because I believe not your keys, not your Bitcoin. But if you're not precious about it, sell your Bitcoin today at 33,500. And for that one Bitcoin, go and buy 1.2 Bitcoin worth of GBTC shares. But again, remember, you're not holding your own keys and you've got counterparty risk. But for fund managers, they're willing to take that risk. So the market, when will the market recover? The answer is very simple. When the GBTC premium goes to zero, the market will start recovering or close to zero. Let's see if I'm right. Let's see if I'm right. And all these on-chain analysts, even though they are amazing, I think they're missing a very simple piece of information. Just look at the GBTC premium. There is cheap Bitcoin for sale on the market. Saifedean, I know you're going to say that not your keys, not your Bitcoin, right?
Yes, I think so. Can you hear me?
I can hear you and I can see you, which is amazing.
Okay, fantastic. I don't know what's wrong on my end. I can't see you, but I can see you on the other computer and I can hear you. So I think we should be good.
That's amazing. So what do you think? I mean, for a fund manager, as long as there are cheap Bitcoin available, surely that they would rather buy GBTC shares at minus 16% than actually buy Bitcoin. Fund managers don't want to hold Bitcoin. They don't want the headache concerned with custody and insurance and private keys and multi-sig and key management.
Yeah, no, I think the headaches are probably less if you take custody. So, I mean, you could be getting a little bit greedy now in terms of trying to take a little bit more Bitcoin. But in the long run, you know, usually the case with the GBTC was that you had to pay a premium. And I think that the reason that there was a premium is not because it's better or it's less risky. I think the premium was there because there are many regulated entities that can't just hold Bitcoin, but they can buy GBTC. But as time goes on and as more and more regulated options become available for more institutional managers, we're seeing more and more decide to take the custody of their own keys, because you're just adding on an unnecessarily large risk of the GBTC, which, in the case of qualified custodians where there's audits and stuff, it might be better to just, have your own Bitcoin stored with somebody else, even if you don't want to store it yourself.
There's one thing that I think you're missing, and that is the 401k in the United States. So, in the United States, people who trade GBTC shares can do this in their 401k, which means that they wouldn't pay any tax on the profits until their 401k gets cashed or until the 401k matures, which means that one of the biggest reasons in the United States for buying GBTC instead of buying Bitcoin is the tax saving, because you're not going to get taxed until your 401k actually comes out, until you cash in your 401k, which is usually years and years and years away. And so that's why people are willing to pay a slight premium. But now that premiums are this. Yeah. Anyway, what I want to talk to you, let's put that aside. You wrote a book, one of my favorite books in the whole world. In fact, if anybody hasn't read the Bitcoin Standard, you're not really in Bitcoin. You can't be in Bitcoin unless you've read the Bitcoin Standard. And you kind of then disappeared for a year or two. We didn't see you out at conferences very much. We didn't see you much. And then the new book came out, which was the Fiat Standard. So maybe just talk about the Bitcoin Standard and then tell us how it relates to the Fiat Standard.
Well, in the Bitcoin Standard, I've tried to explain Bitcoin from first principles for somebody who doesn't really know much about money, about computers, about programming, about networks. I tried to write it in a way where somebody could start, with a blank page and approach the topic and try and figure out what is actually going on here. How does this thing work? So I studied Bitcoin for quite a few years. Spent a lot of time trying to work my way around it, and spent a lot of time talking to the software developers and the Bitcoin engineers to figure out how it works and to tie that in with the significance of its role as money. And that's really the most important function of Bitcoin, the most important role that it can serve. So I explained Bitcoin from a first principles perspective. I explained why it's important as a form of money, what makes it unique, which is the fact that it is the hardest money that we've ever invented. And I brought up the stock to flow, which you mentioned earlier, because the stock to flow measure, I discussed how it relates to other monies, gold, silver. Gold was the money of the whole world by the turn of the 19th century because it had the highest stock to flow. In other words, the amount of stockpiles of existing liquid gold on the market as a ratio of, as a multiple of the annual production, it is the highest in all commodities, in all market commodities. It is the highest for gold. And so that, I argue, is why gold became money. And that's and silver has the second highest stock to flow ratio, and that's why it became the second money, but then eventually it lost its monetary role. Now, why Bitcoin is unique and important is that its own stock to flow is continuously declining, and sometime in the next 3-4 years it's going to decline under the stock to flow. The stock to flow for Bitcoin is continuously rising. In other words, the supply growth rate is declining, and sometime in the next couple of years it's going to overtake gold. It's going to start going up faster than gold. It's going to start having a stock to flow ratio that is higher than gold. So
are you surprised
right now, the supply growth rate for gold is around 1.5 to 2%, and Bitcoin is somewhere around that range as well. And so sometime over the next few years, gold is going to start becoming harder than, Bitcoin is going to start becoming harder than gold. And I explained why that happens to be the case in Bitcoin, with reference to the way that Bitcoin works, particularly the difficulty adjustment, which I think is the most genius and the most unique and important contribution of Bitcoin. All the other pieces of the Bitcoin puzzle were there before Bitcoin came about. Proof of work, cryptography, and encryption and hashing, all of that stuff. It was around before, and Satoshi got all of these existing technologies and put them together. And the thing that he added, the magic sauce, was the difficulty adjustment, which ensures that the currency supply continues to increase by the pre-scheduled and predetermined rate. And that's why Bitcoin is going to become the hardest money that humanity has ever seen, which makes it the best store of value and makes it the best way for us to store our value into the future. That's how I think of it.
And that's all in the Bitcoin standard. Saifedean, are you surprised that right now Bitcoin has deflected from the stock to flow model? And to quote Plan B, who is I'm going to say the author of the stock to flow model, but are you surprised that the model is diverging from the stock to flow at the moment? Saifedean, can you hear me? Oh man, I hope we haven't lost Saifedean.
Yes, I can hear you.
So are you surprised that the price of Bitcoin has diverted so much from the stock to flow model right now? Because right now it's the highest divergence from stock to flow that we've ever seen.
Yeah, but I mean, it's not entirely surprising because if you look at it in terms of the stock to flow ratio, if you look at the error margin around it, Bitcoin's price has really only it's still within the 2 standard deviations of the prediction, and so the model is not going to always be accurate. But the point is that on the long run, it continues to outperform a random guess, and it's still within 2 standard deviations, so it's still pretty close to what the predicted price is going to be. Now, if you look at it, the predicted price on the model is somewhere like 60 or 70,000 or 80,000, and the price right now is 30. So that looks like it's a huge difference, but it's actually not that huge of a difference when you think about the range of possible prices for Bitcoin. This is actually a pretty narrow range. We're still in the 5-digit area, and as long as we're in the 5-digit area, then Bitcoin is roughly in the range that the model predicts. So the model isn't going to be very precise because, as you can see, a lot of things affect Bitcoin, but it ends up being relatively it ends up being better than a random guess, and we're still within 2 standard deviations. So for me, this is still quite fascinating to watch how well this model works. And it would require the price to drop further, or at least stay at this level for the next few years, in order to be outside of the 2 standard deviations area.
Yeah, I mean, the Plan B is talking about it being around 47,000 in August, and if it's not 47,000 in August, I think he says that then he'll consider that the model has been. It says also my floor indicator says we will not go below 47K August close. Anyway, let time tell us what that's going to show us. Let's talk about the new book, the Fiat Standard, because again, once I had read the Bitcoin Standard, first of all, I thought it was the most comprehensive book. And again, to any of our viewers who haven't read the Bitcoin Standard, you have to read the Bitcoin Standard. That's like your entry into Bitcoin. Gift it. I think I've gifted 15 copies of the Bitcoin Standard to various friends around the world. It is the most pivotal book that you need to read. Why did you feel the need, or what can we expect to read in the Fiat Standard? What are you going to tell us about Fiat?
Well, the Fiat Standard, I wrote that book after getting the idea of doing to Fiat what I did with Bitcoin. So I look at it in the same way that I looked at Bitcoin as an engineer, as an economist, trying to explain how it functions and what the economic significance of it is. But I applied that lens to looking at Fiat. So it was like I was, it's like I'm doing a research report on an altcoin, and you're trying to look at the dev team, and you're trying to look at the history of the GitHub repo, and you're looking at the white paper, and you're looking at the market conditions. And in a sense, I tried to separate the political romantic stories that people tell themselves around fiat money, and try and focus on the practical engineering aspects of how this thing works. And so I found that to be actually a very useful analytical lens, because if you just look at how fiat works, from a functional perspective, how the and doing that with reference to Bitcoin. So what I did is, I have in Bitcoin, we have a sane, well-designed monetary system that has all the basic building blocks that you need in order to make a monetary system works. And I looked at the parallels between that system and fiat, which is kind of more like an archaic system. So what is it that we have in fiat that makes what is it that makes fiat tick? What is the equivalent of mining? What is the equivalent of the nodes? So if you start thinking of it this way, you come up with some very powerful ways of understanding fiat money and understanding the current monetary system. The most important one, I think, is the fact that the equivalent of mining in fiat is lending. The way that new fiat money is created is that new loans are made by financial institutions that are allowed to make loans and are guaranteed by the central bank. If you can make a loan with fiat, then you've created new money. And that's how the mining process works. So effectively, banks are fiat miners. That's what fiat mining is. It's the banking process. When you take out a loan for your house, the bank actually makes new money. They're not going to take $1 million from somebody else to give them to you so that you can buy a house. They'll actually make their own $1 million out of thin air and hand them to you, and then you have to pay them back. That's how the whole system works. So when you think about it this way, you can see why debt is so pervasive in the fiat system. You can see why everybody's in debt. Individuals buy all of their goods on debt. Corporations, governments, everybody is in debt. And the more income you have, you don't pay off your debt, you take on larger and larger debt. In fact, being rich in the fiat standard is about how much debt you can take on. Rich people are the ones who are able to take on the most debt. And that's why everybody in fiat, as opposed to Bitcoin, everybody's accumulating a negative balance. So you apply that analysis and you come up with some very powerful ideas of understanding the world around us. And I think, money is 1/2 of every transaction. 1/2 of every transaction is monetary. And so because of that, it has an enormously pervasive influence on everything in our life. And I discuss how it affects, how monetary policy affects food production, how it affects food policy, dietary guidelines, how it affects the energy market, how it affects time preference and how people value the future, how people stop saving under the fiat system and then become more and more short-term focused rather than long-term focused. I think all of these things have a lot to do with the money that people use, because money is the very important tool that they use to deal with themselves and to deal with the future, trade with themselves in their future and to deal with other people. And it's and then the final part of the book discusses whether Bitcoin can fix this and replace fiat if that's possible. And I think it was a very fun exercise to write the book. I've been writing it for something like 3 years now, and it's almost done. It'll be out in December. You can pre-order it now. It's not available on Amazon yet, but you can pre-order it on my website. And if you pre-order it now, you can get the first draft of the book, which is, it's going to go through some editing from now until publication, but you can get it now and read pretty much the final draft of the book with some changes. And you can order it for delivery in December to get the hardcover or the audiobook or the digital book.
Now, it sounds to me like you should probably read the Fiat Standard before you read the Bitcoin Standard, because you kind of want to know what's broken about fiat before you say, okay, well, here's the solution. You've written it the other way around. You've written the solution first, and then you write a book about the problem.
That's true. I think initially Bitcoin was the orange pill that woke me up into understanding what is actually going on with the fiat monetary system. So you had to see how the proper modern technology works, and then you look back and you think, oh, okay, well, that's here are the problems with this primitive system. But you should read the Bitcoin Standard Standard first, I think, because it's. I mean, the two books are kind of like the second book is like a sequel to the first. It picks up where the first one left off. Historically, they go back and forth. Analytically, it's we move from one point to the other, but from one system to the other. But I think you read the Bitcoin Standard first and then the Fiat Standard.
Okay, amazing. Saifedean, listen, I'm so excited for this book. I mean, like I said, the last book for me was my entry into it. It's the book that I tell everybody, if you want to know what Bitcoin is about, you read this book. Let's talk again after you've read the book. So I'm super excited about your theories here and to read about. I mean, you've just given me one taster about how debt is mining. And that is, to me, like that's a paradigm shift. I actually never thought about it like that, but it's so true. And that's why society functions on debt. And it's I don't know, I have to get this book. So I'm definitely going to subscribe. Guys, we have left you guys a link at the bottom in the description to Saifedean's website. But if you haven't read the Bitcoin Standard, read the Bitcoin Standard. Now, I'll remind you guys that the last time we reviewed a book, it was Chedz's book. And we made that book a bestseller. So let's go and make this book a bestseller before it comes out. So what do you say? Cool. So I can see that you're.
That sounds like a good idea to me.
Cool, my friend. Good to see you, my friend. Good luck with the book. I'm definitely going to get it and read it and talk about it as soon as we come on.
Thank you. Thank you so much. Have a good day. Cheers.
Amazing. Guys, that's Saifedean, and he's one of the smartest guys in Bitcoin. Now, I know you guys are commenting about my eyes that I look stoned. The truth is that I got off a flight. I've been on a plane for about 20 hours from New York to Johannesburg, and then a layover in Johannesburg, and then to fly us. I've been on a plane for 20 hours, which is why I don't look myself. Tomorrow, I'm going for a haircut. I'm going to shave. You're going to see a new run tomorrow, back in the morning. We're not going to have Sheldon's show tomorrow morning, obviously, because Sheldon has COVID, unfortunately. So yeah, you're stuck with me. And tomorrow we are going to be talking to none other. Get this. Let's see. Is there a tile here? There's no tile. But tomorrow, Richard Hart. Full show with Richard Hart. Full show. The guy's smart. I mean, say what you want about Hex, and we're going to ask him a lot of questions about Hex tomorrow. The guy's smart. He was on Banter. His views on Banter were superb. And so tomorrow we've got Richard Hart coming on the show. Also, later this week, you know the psychologist from Billions, Wendy, the psychologist from Billions. You know who she is, right? So there's a towel. Richard Hart coming on tomorrow. So tomorrow we have Richard Hart on, 10 a.m. EST, the full show with Richard Hart. Thursday, remember the psychologist from Billions, Wendy? You know, Axel Rudd's personal psychologist? Well, she's coming on the show. Yeah, she's coming to talk to us about trading mindset. But the original one, obviously not the actress. We don't want the actress on. Maybe we do. But we're actually talking to Wendy, the real Wendy. Her name is Denise. Denise is coming on our show on Thursday to help us get into the right mindset. And then Friday is Banter. So big week here at Banter. I will see you guys again tomorrow. Same time, same place, 10 a.m. EST. If you've enjoyed today, smash the like button. Give us one more like. Share this with your friends. I will see you guys again tomorrow. Until then, trade well, my friends.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own